Hi there, my name is Miguel Gonzalez. I'm a mortgage broker with my loan choices, and welcome to the First Home Buyers Academy. If this is the first time you watch the First Home Buyers Academy series, I really want to invite you to have a look at the previous videos. So we put together lots of information to help you in the process of buying your first home. So some of these videos include the steps in the process of buying your first home, what a home loan pre-approval is, and what the lenders will look when assessing a home loan application. We also put all of this information into perspective on, we discuss a case scenario as well. And, just our previous video, we discussed the different government benefits available for you as a first home buyer. So don't miss any of these videos. They have lots of content that I know you will enjoy. Also, I really want to invite you as well to subscribe to our YouTube channel. So just click here on my left, your right, and make sure you get the latest news and tips from us. And just give us the thumbs up so that we continue on producing great content for you. Okay, today we are going to discuss the different products that are available in market. Basically, just discuss your loan options when you're applying for a home loan pre-approval. First thing you're going to encounter, and the first decision you need to make, is whether you're applying for a variable interest rate home loan or a fixed interest rate home loan. Obviously, in both cases, there is some pros, there is some cons. So what I'm going to do is I'm going to start with the variable rate, and I'm just going to discuss the good, the bad, and the ugly. And then we go from there. Variable rate, it's all about flexibility. So you have the ability to make as many extra repayments into the loan without any penalty. You decide how much you want to put as extra repayments, and there will be no penalties whatsoever. So in other words, if your loan settles today and tomorrow you win the lotto and you decide to pay off the loan and close that off, then there will be no penalties. So that's as easy and flexible of how the variable rate could be. The one probably of the disadvantages is, like as the name suggests, is a variable rate. So the rate will change down the track. It could go up, it could go down. So the great thing about it is, like, over the last few years we have seen interest rates coming down. So a lot of people have benefited from these rate cuts, and they have seen the savings coming into the mortgages. So they have the option to actually either get some lower repayments or pay the loans faster. So rather than keeping the loan for a long period of time, they decided to put some extra money into the loan and they paid the loan faster. So that's a great thing when it comes to variable rates. The other advantage that you have with this kind of loan is you have the availability of different loan features. You can have all the bells and whistles into the loan, and I will discuss the loan features later on. But you can have all the bells and whistles with variable rate. Probably the only thing that it's ugly of the variable rate is if interest rates start to go up, then your repayments will increase, and that will definitely affect your cash flow position. So just watch out in terms of what the expectations are in the future for interest rates, and that will help you to make a decision whether it's time to fix or not. On the other side, we have fixed interest rate home loans, and what the name suggests is basically you fix the loan for a certain period of time. You fix the rate, you lock into a particular interest rate for a certain period of time. Normally you lock in for 1 to 5 years. You choose the period that you locked in. One of the main reasons for doing that, first, is people like budgeting. People like to know, to have certainty into the loan repayments. They don't want to know anything else. They don't want to think about what's going to happen if the loan starts to increase, if the interest rates start to increase. They want to know certainty about the loan repayment for a period of time, and that's what a fixed rate gives customers. So it gives certainty on the loan repayments. It's not going to change regardless of what happened with the market, regardless of what happened with the economy. If interest rates go up or down, the loan repayment is going to stay the same. It's protection against any interest rate increases in the future. So yeah, you actually keep a low interest rate, and yeah, so that's a bit of protection there. But on the other side, if interest rates continue to go down, then you will be missing on new offers. You will be missing on the rate cuts passing on into your home loan. So you will stay into a higher loan repayment, and yeah, that will affect your position as well. Other disadvantages is you're limited into the number of loan repayments that you can make into a calendar year. Depending on the bank, they will limit the amount of the extra repayments to $5,000 or $10,000. It will really depend on the bank. If you make more than this amount, then you will have some penalties as well. Same scenario again. If your loan settles today and tomorrow you win the lottery and you decide to pay off the loan and close that off, then you will be issued with a breakup fee, a breakup cost, and yeah, that could be very expensive as well. So yeah, there is more fees involved into breaking up a fixed rate home loan. In terms of the features, it's limited as well, so you don't get as many features as you will have with the variable rate home loan. So there is some limitations there as well. But yeah, so look, in terms of comparing the variable rate and the fixed rate at the time of recording, so we're recording this on October 2020. Currently, the 2 and 3 years fixed rate are actually lower than the variable rates. So yeah, so there might be some advantages of fixing the rates. It really depends on the time when you choose, when you apply for the home loan, what's happening at that particular time. So just make sure you have a chat with us before actually deciding, so we can help you in deciding which interest rate might benefit you the most. The other option as well, so you can actually have the best out of both worlds, and you can actually have a portion of your loan into a variable interest rate loan and a portion into the fixed interest rate home loan. So this is a split loan. That's what we call about a split home loans. And yeah, you can have the best out of both worlds as well. Now, in terms of the loan repayments, for you as a first home buyer, the recommendation is always for you to make principal and interest loan repayments. Why? First, you get access to preferential interest rates. So if you make principal and interest repayment, the interest rate are actually lower. The second benefit as well is you start making principal repayments into the loan. So that means that the balance of the loan will start to decrease from the beginning. The cost of the interest starts to reduce. And yeah, you pay off your loan eventually during the term of the loan. So it's actually really good. There is some benefits of choosing principal and interest repayments, but you still have the option as well to choose interest-only repayments. If you choose to have interest-only repayments, there is some disadvantages here. One is interest rates are more expensive. Two is the balance of your loan will not lower, and over time you pay more interest. The cost of the interest will be higher for you, but this is an option that is available for you. It really depends on the advice that you receive. So you can choose to have this if you have been advised by your accountant or your financial planner. The other disadvantage is you need to provide more documentation when you're applying for a loan with interest-only repayments. Now, in regards of the loan features available for your home loan, well, most of these features are available for variable rate interest home loans. So offset accounts, so you have the option to have a separate savings account that it's fully transactional, And basically what it does is every single dollar you put into the offset account will help you to pay less interest into your home loan. So in other words, if your home loan is 100 and you put 20 into the offset account, you only pay interest over $80. Okay, so yeah, it helps you save money save on interest in your home loan. So for some people it's a great option. It's actually keeping your money, keeping your savings aside, and helping you reduce the cost of the interest into your home loan. It only works with variable rate home loans, same as the redraw facility. So redraw facility is the ability to have access to any extra repayments you make into the loan will be available for you. So it only works with variable rate interest home loans. So every single extra repayment you make into the loan is available for you to redraw in the future if you need so. You can also have professional packages, and this is basically it's more commonly known for medical professions. You have the option to borrow more money, so up to 90% normally value of the house, and you don't have to pay for lender's mortgage insurance. So it's actually a really good option if you're into medical profession. And from time to time the banks will offer these professional packages as well for accountants, lawyers, and they might choose a particular profession as well that they have interest in. Now, these days, every single bank offer internet banking. Yeah, so the ability to transact over the internet and get your loan balance, statements, everything online. Some of the features as well may include the family guarantee, family pledge, so the availability for you to ask your parents or someone to provide a security to help you provide a security of a property to improve your deposit for the property that you're buying. Yeah, that's basically in summary some of your home loan options. There is a lot of different home loan options and loan products available in the market. So just make sure you get in touch with us so that we can actually help you in the process. What happens when you contact us and when you contact My Loan Choices and you want us to help you be your mortgage broker? So basically the first thing that happens is we get a meeting with you and we discuss what your borrowing capacity is, we discuss your savings, we discuss if you're short into your savings, how much deposit you actually need to complete. And once you are ready to apply for a home loan, we can present you with different options, different banks, rates, so the ones that best match your situation and help you to save money as well. So you can actually choose a bank, and then from there we help you in all the process of collecting the documents, applying for a home loan on your behalf, and get a home loan pre-approval. So once you get the home loan pre-approval, that's the time that you can get into shopping around. You can go open for inspections, decide which property you want to bid on or put an offer. And once you find the property and you enter into a contract of sale, then the next step will be for the bank to organize a valuation. So you provide us with the contract of sale, we organize a valuation for you, and we help you as well in getting a formal approval from the bank. Okay. Once the bank issue the formal approval, they will issue the loan documentation to you, the loan contract. They will send the loan contract to you. We review the loan contract together, make sure that everything is right. You sign the contract, send it back to the bank, and then after that is basically the bank will get ready for settlement. So they will make sure that they have enough funds to complete the purchase. They will pay pretty much everyone. They will pay your conveyancer, the vendor. If there is any existing debt into the home, they will pay the other bank. They will pay any government costs as well that are involved into the transaction. and once they pay pretty much everyone, if there is any remaining money that you need to provide, that's your final contribution. You make the final contribution, and this is the time that you are waiting for. This is the time where you get the keys of your new house and finally move in. So congratulations, you secure the purchase of your first home. Now look, I hope you have enjoyed all the videos from the First Home Buyers Academy. This is the first series of videos. If you haven't done so, just make sure you subscribe here on my left, and yeah, follow us, give us a thumbs up, and yeah, so that way we can actually continue producing some more content and information and tips for you. And yeah, look, we're here to help you. Make sure you give us a call or send us an email so that we can start the process and helping you in the process of buying your first home. Looking forward to see you in the next video. So bye for now.